Welcome, everyone. Today we're diving into the nitty-gritty of filing cryptocurrency taxes in Australia. There's a lot to unpack, from differentiating between traders and investors to keeping those crucial records.
Absolutely. There's a whole world behind it, huh? I'm curious about how those distinctions really shake out.
Yeah, it's like if you're trading frequently or running crypto as a business, you're basically a trader. You're subject to stricter business tax rules.
Mm-hmm.
Whereas if you're just holding, maybe mining as a hobby or focusing on long-term growth, you're an investor.
Got it. So the lines really blur depending on your activity level. But what happens tax-wise for these two groups?
Well, here's where it gets interesting. Investors can nab a 50% capital gains tax discount if they hold their assets for over 12 months. However, traders generally don't get that benefit, though they might get a business offset of up to $1,000 annually. That definitely
Right.
incentivizes holding versus trading.
It almost sounds like Australia is nudging people towards a long-term mindset with crypto.
Exactly. It's like they're saying, hold on, let's chill and see how it goes. But if you end up with a capital loss as an investor, you can only offset that loss against future gains and not from other income. Quite a nuanced balance.
Wait, so if you're an investor and you face a loss, you can't just deduct that loss from your normal income?
Right, you can carry it forward, but you can't mix it with your other income deductions. It
Mm-hmm.
really puts emphasis on accurately tracking all these transactions.
Speaking of tracking, keeping those detailed records seems to be a huge part of this whole process, right?
Spot on. Every transaction, purchases, sales, even fees, needs to be documented meticulously. And you have to keep those
Yeah,
records for at least 5 years. That's a long time, but it's essential for verifying your capital gains or losses.
and that includes records for DeFi transactions, NFTs, and even wrapped tokens, doesn't it?
Exactly, even if it's something like a decentralized finance transaction, which might seem um, less formal, it's still subject to capital gains tax. The ATO is keeping a close eye, especially with data sharing from
Right.
exchanges. It's all about transparency.
Now, what about NFTs? I've seen a lot of debate around their tax treatment.
Good question. The tax standpoint on NFTs can vary. If you're creating NFTs to sell for profit, the ATO might treat that as business income. But if you're buying NFTs as an investment, they're subject to capital gains tax rules, just like other crypto assets. It's a pretty fine line.
Mm-hmm. I kind of wonder though, doesn't that make things a bit ambiguous for creators who might dabble in both selling and holding NFTs?
Yes, that's a valid critique. It certainly can get murky, and that's why maintaining thorough records and keeping clear business records is so critical. If your activities shift, you need to show evidence to reclassify your standing with the ATO to avoid potential penalties.
Speaking of penalties, the ATO seems to be very proactive with its data matching on transactions, right?
Absolutely, they've been intensifying their scrutiny. With crypto exchange data shared directly to the ATO, anyone with an Australian account or wallet is on their radar. It's like they've got a digital footprint on everything,
Yeah,
dating back to 2014. They don't let things slide.
that's intense. So if someone doesn't file correctly, penalties are inevitable.
Exactly, and that's why making sure you're filing correctly is key. Filing through the ATO's MyTax system via your MyGov account comes with options specifically for capital gains or losses not coming from managed funds. It's all about ticking the right boxes.
Mm-hmm. And then there are those deductions and tax breaks available. Could you elaborate a bit on those?
Sure, for instance, if your income is below the tax-free threshold, you're basically exempt from paying tax, which is a relief for casual investors. Additionally, traders can deduct transaction fees in the year they occur, even if the crypto isn't sold yet. There are also deductions related to crypto mining expenses and even
Right.
expenses like loan interest used to purchase crypto. All these little opportunities really add up.
It sounds almost too good. Aren't there risks with such deductions? Could they potentially lead to overcompensating?
That's a fair point. While these deductions do help, they require solid documentation. You can't just claim them without backup. I mean, if you miscalculate or misrepresent your expenses, that's a red flag for the ATO. Accuracy is absolutely
Yeah.
crucial here.
And how about deferring gains? I remember something about timing your sale to shift gains into a different financial year.
Exactly. If you are anticipating a profit, selling after July 1st could potentially defer your capital gain into the next tax year, helping manage your tax liability more effectively. On the flip side, if you're down, selling could help offset your future gains. It's all about strategy. Strategy is everything.
This strategic aspect pretty much adds a layer of complexity, right? It's like playing chess with your portfolio.
Absolutely. It's like you have to plan several moves ahead. Each transaction can tip the scales and affect your tax outcome. So it's vital to treat these decisions with as much care as budgeting for a business expense.
Yeah,
A calculated move every time.
and this is particularly so for active traders who change classifications between investor and trader, yes?
Exactly. If your activities transition from long-term holding to frequent trading, you need to update your records and notify the ATO. That reclassification isn't something to take lightly because mixing up your status
Right on.
could bring additional scrutiny or penalties. It's a necessary formality.
You mentioned earlier about cost deduction differences between investors and traders. Could you shed some more light on that contrast?
Sure thing. Investors only recognize transaction costs when the crypto is sold, making it a post-sale adjustment. Meanwhile, traders can deduct fees and other costs in the same financial year they occur, regardless of whether they've sold the crypto. So, traders have this front-loaded expense advantage. That timing can really shift your tax picture.
It's interesting how timing plays such a crucial role. I do wonder, though, doesn't that sometimes lead to aggressive tax planning?
Yes, it can. And that's where the ATO's data matching comes in as a check against potential abuse of these deductions. It's a fine balance between leveraging available benefits and maintaining
Right.
genuine, transparent records. It's a tightrope.
And on the technology side, it's all really intertwined with how DeFi transactions are handled, right?
Exactly. With DeFi, every lending or borrowing action, even liquidity pool contributions, triggers a capital gains tax event. The challenge is that these are often more dynamic than standard crypto trades, so keeping a detailed log of every transaction becomes even more critical. It's like juggling multiple balls at once.
So, summarizing, if you're dealing with Australian crypto, whether trading or investing, you need to be super diligent with your records, know your classification, time your trades strategically, and keep an eye on those potential deductions and offsets.
Absolutely, that's the crux. It's all about staying compliant while making the most of the available tax incentives. If you get it right, it can really work in your favor despite the complex landscape set by the ATO. It pays to
Yeah,
be meticulous.
fascinating stuff. This kind of detailed understanding really underscores how, even in a digital age, old school record keeping and due diligence remain paramount.
Exactly. And while the crypto market is booming, remember the global valuation hitting over $2.5 trillion. Staying on top of these requirements can help you sail through tax season without hitting any bumps. Absolutely crucial for any crypto enthusiast in Australia.
Thanks for the deep dive. It definitely gives those of us dabbling in crypto a lot to think about beyond just the gains and losses in the market.
No problem. Always happy to chat about these complex yet vital topics. Stay smart, keep those records straight, and enjoy the ride in the world of crypto.
That's a wrap then. Till next time, keep questioning and stay compliant.